Every single month, exactly $500 was automatically drafted from my checking account and sent to a financial advisor. Over the course of a year, that added up to $6,000. Over a decade, with compounding interest factored in, that was easily $100,000 of my future wealth completely gone, all to pay for a couple of phone calls a year and some PDF reports that I barely understood. One evening, out of sheer curiosity, I fed my entire portfolio allocation and my long-term financial goals into ChatGPT. Within 90 seconds, the artificial intelligence generated a comprehensive wealth-building plan, analyzed the hidden fees in my mutual funds, and mapped out a tax optimization strategy that was actually better than the one my advisor had given me. That was the exact moment I realized I did not need to pay $6,000 a year for someone to manage my money. I fired my financial advisor the very next day, and in this video, I am going to show you exactly how I replaced them using free artificial intelligence. To understand why this is such a game changer, we have to look at how the traditional financial planning industry actually works. Most advisors charge either a flat monthly retainer, like the $500 I was paying, or a percentage of your total investments, usually around 1%. On the surface, 1% sounds tiny. But let us look at the real math. If you have a $250,000 portfolio, a 1% fee is $2,500 a year. If your portfolio grows to $1 million over your career, you're paying $10,000 every single year. Over a 30-year investing lifetime, that single 1% fee can wipe out more than $300,000 of your total nest egg due to the lost compounding power of that money. And what do you actually get for that price? Statistically, about 90% of actively managed funds failed to beat a simple, low-cost index fund that tracks the overall stock market. Most advisors are not financial wizards beating the market. They are salespeople who put your money into pre-packaged portfolios and charge you a premium for it. This is where ChatGPT comes in. It is not a licensed human, but it has instant access to the entire history of economic theory, tax codes, and investment strategies. It does not get commissions for pushing expensive mutual funds, and it does not have a conflict of interest. When I first started using it for my finances, I was skeptical. I wondered if an AI could really understand the nuance of my personal life, my risk tolerance, and my long-term goals. But as we discuss here on the Stacked AI channel, the real secret is not just asking the AI what to buy. The key is using it as a highly sophisticated reasoning engine to analyze your current situation and explain complex financial concepts in plain English. The first task I gave ChatGPT was to analyze the actual investments my advisor had put me in. I downloaded my account statement, stripped out my personal identification information for privacy, and copied the list of my mutual funds into the prompt. I asked ChatGPT to find the expense ratios for each fund and calculate the total annual drag on my portfolio. The results were shocking. My advisor had placed me in active mutual funds with an average expense ratio of 1.2%. On top of that, there was a 1% management fee. ChatGPT did the math and showed me that I was losing over 2% of my total portfolio value every year just to fees. Then, I asked the AI to find equivalent, low-cost exchange-traded funds that tracked the exact same sectors. It recommended a diversified 3-fund portfolio with an average expense ratio of just 0.04%. By switching to the funds ChatGPT suggested, I instantly saved myself thousands of dollars a year in fees while keeping the exact same market exposure. Let us break down that fee difference a little further to see how it quietly drains your wealth over time. Imagine you start with $50,000 and contribute $500 every single month for 30 years. Assuming a historically average 8% annual return, your portfolio would grow to roughly $830,000. But if you have an advisor and expensive funds charging you a combined 2% fee, your net return drops to 6%. With that 6% return, your portfolio only grows to about $500,000. That 2% difference cost you over $330,000 of your own money. When I saw these numbers laid out on my screen by a free AI, It became painfully clear that the biggest threat to my retirement was not the stock market going up and down. It was the steady bleed of fees draining my account balance month after month. Next, I wanted to tackle my debt and taxes. I had a mortgage, a car loan, and some lingering student debt. I gave ChatGPT the exact balances, interest rates, and minimum payments for each debt. I asked it to compare the debt snowball method, which focuses on paying off the smallest balances first for psychological wins, against the debt avalanche method, which prioritizes the highest interest rates to save the most money. In less than 3 seconds, ChatGPT built a month-by-month repayment schedule for both methods. It calculated that using the avalanche method would save me $3,400 in interest and shave 11 months off my debt-free timeline compared to the snowball method. But it did not stop there. I also asked it how to optimize my tax-advantaged accounts. I told it my annual income, my tax bracket, and my company's retirement match policy. The AI laid out a clear, step-by-step order of operations. First, contribute exactly enough to get the maximum employer match. Second, maximize my health savings account because of its triple tax advantage. Third, max out my Roth IRA. And finally, put any remaining savings back into the traditional retirement account. It was a flawless, customized wealth-building roadmap that matched my specific tax bracket perfectly. It is important to clarify that ChatGPT did not log into my bank accounts, and I did not give it any sensitive personal data like my social security number or bank account routing numbers. You should never upload sensitive personal information to an AI model. Instead, I treated ChatGPT like a highly analytical consultant. I presented hypothetical scenarios and anonymized data. For example, instead of saying my real name or naming my employer, I told it I am a 35-year-old professional living in Illinois with a stable $80,000 salary. This approach kept my personal identity completely secure while allowing the artificial intelligence to run complex mathematical calculations and provide highly tailored strategies. Another major task that advisors use to justify their high monthly fees is portfolio rebalancing. Over time, as different sectors of the stock market grow at different rates, your target allocation will naturally drift. If your goal was to have 80% stocks and 20% bonds, a strong year in the stock market might leave you with 85% stocks and 15% bonds, which exposes you to more risk than you planned. Normally, an advisor would charge you to fix this. When I asked ChatGPT how to handle this, it gave me a simple, elegant formula. I typed in my current dollar balances for each of my funds, and the AI calculated exactly how much money I needed to redirect from my next few monthly contributions to bring my portfolio back into perfect alignment, without selling any assets and triggering capital gains taxes. It took less than 10 seconds, and it was completely free. The secret to getting these kinds of results is all in how you structure your prompts. If you just type in "how should I invest my money," you will get a generic, useless response. You have to give the AI a highly specific role and clear constraints. I started my prompt by telling ChatGPT to act as a fiduciary, fee-only financial planner with 30 years of experience. A fiduciary is legally required to act in your best interest, and setting this persona forces the AI to adopt a highly conservative, objective tone. Then, I provided the raw data. I shared my age, my current net worth, my annual post-tax income, my fixed monthly expenses, my investment horizon, and my risk tolerance on a scale of 1 to 10. Finally, I gave it strict safety constraints. I told it to never recommend individual stock picking, options trading, or volatile crypto assets, and to focus entirely on low-cost index funds and broad market diversification. If you want to see the exact copy and paste prompt templates I used to get these results, we cover this on Stacked AI in our other videos. One of the unexpected benefits of using artificial intelligence over a human advisor is the complete lack of emotion. Human advisors, despite their best efforts, have biases. They might favor certain fund families because of industry relationships, or they might panic sell during a market downturn to quiet an anxious client. ChatGPT does not care about market hype. It does not get scared when the index drops 3% in a day, And it does not get greedy when a speculative asset gains 100% in a week. It looks at cold, hard historical data. It reminds you that during the last century, the stock market has recovered from every single crash and continued to march upward. Having an objective, non-emotional sounding board that you can chat with at 2 o'clock in the morning during a market correction is incredibly valuable for keeping your emotions in check. Firing my financial advisor was intimidating at first. I felt a sudden weight of responsibility. But once I realized that managing a portfolio of broad market index funds requires less than 2 hours of actual work per year, the fear completely vanished. You do not need to pay someone $500 a month to buy the entire stock market for you. You can do it yourself using a free brokerage account and a simple, AI-assisted plan. By taking control of my own finances, I am saving thousands of dollars in fees every single year. Money that is now staying in my account and compounding for my own retirement, not funding someone else's lifestyle. Artificial intelligence has leveled the playing field, giving everyday investors access to high-level financial analysis for free. This is educational content, not financial advice.